Hello everyone, how's it going? In this video, we're going to cover some interesting points about Alibaba. I've divided this video into two categories. Number one is some unique, interesting insights about Alibaba. We'll cover that first. And the second, we'll go over the need for innovation, the incessant desire to develop and innovate, or otherwise you basically kill Alibaba. So what are those points that we need to look as investors? Now, first, let's go over some of those interesting insights. So, this was a podcast that was released back in April of 2021. And this podcast basically goes over the whole business model of Alibaba in a unique perspective. It's called A Giant Among Giants. And this particular paragraph here, it sums up the whole timeline of how Alibaba evolved, developed and established itself to that giant what it is now. So I'll go through this paragraph through the different timelines of how they developed. In 1999, that's when Baba was established, right? But it was established as a copycat of eBay. Basically, Jack Ma had visited Seattle and he had seen all these things being developed there, and he basically brought back to China. So these were all copycatted products. There was no reason for them to innovate. They saw what was happening in the United States and they said, well, let's build the same thing in China. So they first started with Alibaba.com. And Alibaba.com, if you remember, it was just a B2B marketplace. So they were just creating that interface between merchants and suppliers. That's about it. And when they saw this was working, then they went into that eBay model. And they created what was now called as Taobao in 2003. And this is now where people can sell and people can buy directly. Then they felt that this was all e-commerce, it's all going through the web, and then they realized that they needed something like PayPal, which could help them in those business transactions online. And with that need, they came up with Alipay, which was nothing but an escrow mechanism for Taobao merchants. Then in 2008, they built what is now called as Tmall. Tmall is nothing but more for branded businesses, like companies like Nike or Adidas, not from the Western country, but more from the Chinese brands. These big brands could come and establish themselves and basically open their shop on Tmall. Now, this is all being done. This is just the e-commerce phase. Then they saw what Amazon was doing with the AWS. And in 2009, Alibaba decided to create their own Alibaba Cloud. They saw how Amazon was creating this infrastructure and they wanted to do that same thing. So there have been these copycats for the longest time. But there is something unique about Alibaba. Alibaba is a very asset light business because they don't own the logistics. They give it out to third party companies, FedEx, UPS, and different other fleet management companies. They just control the infrastructure or the software that helps establish all these platforms. So it's an asset light business, and because of which the margins that they create are very high. And this line explains what Alibaba is standing for. The ethos in Alibaba is all about creating that platform, take that friction to zero, create collective good for everybody, and let everybody benefit in the process and be the meta aggregator on top of it. It's like they're creating that road even before the cars started being developed or people started to use cars to travel on these roads. So they are just creating that road or rail tracks and keeping it available so when people are ready to use them, they have a service like Alibaba to run their cars on or use the service that Alibaba is providing. Now, there are a few other interesting insights which they go over in this podcast. And one of this is this. If you look into the China's different tires, and China is basically tires into 4 or 5 different types. So tire 1, tire 2, tire 3, and tire 5. So you can see that the highest level or the topmost level, it comprises only about 8% of the whole population of China. And this 8%, these are places like Beijing, Shanghai, and Guangzhou. And these are what you call as the most wealthy and people with money. They basically establish themselves in these localities. And these localities, you would find places, things like malls, good infrastructure available. You have different shops and different brands available for people to buy. And there's good competition, healthy competition, so people have good variety for themselves to choose. But these other tiers, do you see the tier 2, tier 3, tier 4, tier 5? These are all places which don't have these infrastructures available. And these are very on the more on the poor end and rural areas where they don't have proper information, proper infrastructure available for them to carry out their businesses. And that is where companies like Alibaba, like Tencent, they came in and they established themselves. And because of the power of internet, they were able to connect all these different tiers. So all these different tiers from tier 1 to tier 5, they all came under one banner of Alibaba. Now, all these people who have been growing up in these regions, they were not introduced to malls. They were not introduced to these retail places, these retail giants. They only know about Alibaba, and that's how they have been brought up. And what happens is from generation to generation, you're just explaining it to your kids. Okay, if you need anything, if you need to buy anything, Alibaba is the place for you to go. Nothing else. So these guys understand Alibaba as the means of their livelihood, of things that they need to survive. It's all provided through Alibaba. And that's the mentality these guys are growing with. So they're not jumping into directly malls, but they're directly jumping into e-commerce online places. And that's the development that's happening from Chinese different cities. Now, this is an interesting chart. And you will see this from a bearish perspective, where people will try to say that, Alibaba is, yes, it's there, it's been pioneered in China, but there are different companies, especially like JD, Pinduoduo, the PDD, and there are many other e-commerce giants who are coming in and they're trying to take away the market share from Alibaba. And this is a problem, of course. I mean, you can see that, the amount of market share that Alibaba had back then is reducing because other companies are taking control of that. But there is some interesting point on this. Now, this is a paragraph where he explains how Alibaba is growing and the extent and the speed with which they're growing. So people don't understand the scale of Alibaba. They think that it's Amazon, but it is bigger in scale than Amazon. He's also going to the extent of saying that Amazon is actually a subscale compared to Alibaba. So let me give you a few statistics about this. In 2015, Alibaba sold 500 billion in volume across their two main e-commerce properties, Tmall and Taobao. Just in these two e-commerce platforms, they sold about 500 billion. And that's $500 billion, not millions. But in 2020, last year, they doubled to about $1.2 trillion. And they're estimating by the year of 2025, they will double again to $2.5 trillion. If you put this in context, in 2015, they only had about 10% of the total retail spending in China. Then by 2020, they had about 20% of the retail spending in China. So with $500 billion in volume, they were only covering 10% of the retail spending. And with $1.2 trillion, they were covering only 20% of the retail spending on China. So there's a huge room for them to expand and grow and go out there. So this is a very interesting thing. He's saying, okay, so say, for example, you're a teenage kid. And if you think about Netflix, you're a young student coming out of the college and you've never bought a cable subscription. You don't know cable subscription. You don't know how the television works with cables. The only thing you know is Netflix. So you buy Netflix. And once you buy Netflix, then you may layer it with Hulu. Then you might have some other on-demand services. You might get some Prime services on there. But you buy Netflix first. And that's what Alibaba is in China. So no matter what these companies, different companies are going out there, like Amazon has its own competition. You have different types of e-commerce companies coming up out here in the United States. Similarly, Alibaba also has these other companies that are coming through, but that does not mean that Alibaba is going away anywhere or gets diminished. But again, these are points that are biased, so do your own research. Now, this is a very interesting article. This is one of the annual letters, a group of annual letters from the Nomad Partnership, which is Nick Sleep's partnership. And this fund ran about almost 10 to 13x of money in 10 years. So, I mean, this is something which needs to pay attention. So they gave this example, and this is a very interesting point, where they quoted Charlie Munger stating that he said, the human mind is a lot like a human egg. So once a sperm has entered, then all other sperms are locked out. A market research company that they visited, and they're giving an example of how this works. They mentioned that this research company, when they looked into different types of marketing and advertising campaigns, they noticed that most car advertising is read after the purchase decision for the car has already made. And it was only read then to gather information to convince other people the purchase decision was rational. Things like, no, it wasn't the car's sexy shape. This car had 12 airbags and emits 170 carbons of carbon per mile. So we have all done it. The human mind has these learned biases, shortcuts, fears, habitats, and basically your mind is you already have some preconceived notions, and anything that you read and grow, you just overlap those same preconceived notions. So anything new that comes in, it's very difficult to penetrate. And with that, they give an example of how Amazon had a good growth process. Well, you see, Nick Sleep back in the Nomad letters, his 50% of his portfolio was in Amazon, and they were explaining how Amazon was still undervalued according to their standards. So they explained that how people only knew about these retail companies, especially like Walmart, where they know that we can only go to a brick and mortar store and they would buy their products from a brick and mortar store where they can touch, they can see, and they can trust the product that they are buying. But on the other hand, Amazon, which is more an online store for people who are now people are more habituated to using Amazon. But back in those days, people did not trust the products that were sold on Amazon. They didn't feel putting the money in buying those products later to find out that these products were of cheaper quality, or they did not seem as they were advertised on the Amazon platform. And that is where people were hesitant to use Amazon. But as the social proof came through, when you saw your neighbor using Amazon, when you saw your friends using Amazon, they recommended these items to you, then you would slowly and slowly maybe start with buying a book. A book is now not too much of a problem. Then you might buy a little bit of kitchen appliance, and you see, oh, those things are good. Then you slowly and slowly you build that trust with Amazon, and you start buying more and more items. And eventually Amazon grows, and then it's able to provide that trust, and you keep on building your base with them. So instead of going to these retail brick and mortar stores, you would now first go to Amazon, which is happening now in the United States. And that is a trajectory which Alibaba is yet to pass through. So it's still in its nascent stage, with only 10 to 20% of China's population using websites like Alibaba. They still have a long room to grow. Now, these were the insights. Now, next is the innovation or daikons, the incessant need for Alibaba to continuously innovate and develop itself. So this is a very good bearish article, and this goes over how Alibaba is not growing as it should have been, and it's not as glowing as people are describing Alibaba. So from growth to value, it's basically talking about how, yeah, it's a big company, it is growing, but it's not growing to the level people are thinking, and it's not as to a discount that you're expecting. So they're talking, it's quoting, oh, Alibaba trades at a discount of 72% compared to Amazon, and that's what people are excited about. But the real picture is different. People are not understanding that how Alibaba's growth is not as exciting as it used to be. So basically, it's talking about how the investment that needs to do in the future growth has to go on incessantly. And the reason for that is Alibaba needs to continuously develop and keep its momentum going. Otherwise, you will have different other competitors come in and jump in and take your market share. And Monish Babra mentioned about this, how capitalism is very brutal. It's almost like dog eating dog. So for every company, and especially when you're on the top, when people see that something is working, something is establishing, then you have so many copycats coming through. See the example of Tesla. Just before Tesla, there were many other electrical companies, electric car companies who ran in, but they all went through bankruptcy or they died out. But just because Tesla worked and Tesla established itself as a very strong EV market company, then you see so many EV car companies being established in the past 2-3 years. That is something which will happen, which continues to happen in the Alibaba e-commerce space as well. So not just with Tencent, which is the biggest competitor to Alibaba, but you also have new budding startup entrepreneurs who are building different types of products which can take the market share from Alibaba's companies. Now, this is very interesting. So if you don't have that innovation and development going on a continuous basis, then you will have a scenario where these competitors that you see on the bottom, they can overtake Alibaba's main enterprises. And this is a very good example. Meituan, this is like a food delivery system, and now they're doing much more than food delivery. It's like the DoorDash and Uber Eats of China. This was considered as a very small player for Alibaba. In fact, Ilimi is Alibaba's version of DoorDash, where it distributes and it basically helps in food delivery to your home. So they thought that Meituan would be very small and Alibaba would, basically eat away. But right now, 65% of the market share is held by Meituan, and Ilimi is gone way back compared to Meituan. And if you don't keep an eye on your innovation and development, then it's easy to break down those bit by bit, all these different enterprises. And that is where you need to have that continuous spawning attitude going on. And this all happened when Jack Ma was running the company. All these developments, most of them happened while Jack Ma was at the helm of this ship and steering with different types of spawning exercises, copying and establishing, using, developing different types of companies. And this is a very good article. This is a very good snapshot showing how the growth for Alibaba has declined. And if you can see the 2018 to 2019 growth and compared to 2019 to 2020 growth, there's a decline. Initially, it used to grow at about 40%, but now it's only 34%. The China commerce wholesale was at 39%, now it's 24%. 37% in the past, 24% now. 23% in the past, 17% now. And the logistics business grew 120%, but now it's only 49%. You can see that how the year-on-year growth has declined compared to its previous years. But that's again a comparison of giants like Alibaba, where imagine a company that's going to go from 500 billion to 1 trillion, then from 1 trillion to 2 trillions. It's difficult. Going from 100 million or 100 billion to 500 billion is faster, but going from 500 billion to 1 trillion will be much slower. Similarly, from going from 1 trillion to 2 trillion or 3 trillion will be even slower. And that's where when you have so much of mass, then you drag and it's very difficult to move and create that effect. But again, these are some interesting points. Now, this is the most exciting and most interesting point to look into. These are the top 3 management people who are running Alibaba right now. While now, where Jack Ma is away from the picture, these are the 3 people who are at the helm of Alibaba and who are running the ship. Daniel Zhang, who's the CEO, he has more of his financial background. And then you have Joseph Tsai, he's more like the vice president, vice chairman, and he's basically a co-founder who, along with Jack Ma, established Alibaba. Then you have Maggie Wu. She basically replaced Joseph Tsai's position as a CFO. So she currently is running the CFO position for Alibaba. Both Maggie and Daniel both have have a CA or CFO, or they come from a financial background. So it's people think that it's easier for Alibaba to get through all the delisting fears that people are talking about, how it needs to comply through all these standards of these regulations, and it'll be easy where you have people like Daniel and Maggie running it with strong financial backgrounds. But at the same time, we saw how the innovation that happens in Alibaba is not because of financial people, but it is because of a visionary attitude, an entrepreneurial attitude who's ready to take risks and try different attitude, look into the different sectors that's happening around your company, and developing them, and basically adopting them and running through the company. And that is where you need people more from a visionary platform. Now, we can't say that Daniel is not of that kind. He has done a few things in his tenure, short tenure, and for Jack Ma to handpick him and put him at that situation. There's no one better to judge than Jack Ma himself. But you can see that there is still some time, or we need some time to see how these things pan out, or how people like Daniel and Maggie or Joseph would give out that innovation drive that Alibaba needs at this point. So I found this very interesting. These are all, again, points that are coming out from different areas. And like the Nomad letter said, Charlie Munger said, the human mind is like a human egg. So these could be biased points. So do your own research, think about it from your own perspective. And if you feel there is something biased, and if you see some evidence bias in my points, put your comments in the description below, and we'll go over it, we'll discuss it. And the whole idea is to research and understand what's going on out there. With that, take care, stay safe, bye-bye.